Okay. Hello everyone. Kristen here, and welcome to Polkadot broadcast. And our topic today will focus on the VC bounty, the next proposed, the uh, oh, okay, sorry. The connection was not good just now. Okay. Our topic today gonna focus on the VC bounty that Max, the founder of HIC, proposed the end of August, and it's raised a lot of discussions in these communities in the community. So today we will explain to our uh, audience that what is the VC bounty and what benefits it can bring to the ecosystem and the main concerns that raised by the community. So I'm very happy to have Max, the CEO of HIC, and Michael, the co-founder of Mandala Train, with us today. Welcome, you guys.
Yeah,
Hey,
thanks, Kristen, for
everybody.
inviting.
Okay, I think to set up some conversation, to set up the some information, context information for our conversation. In the first part, I will invite Max, to uh, tell us more detail about, what was your original motivation for proposing
Mm,
a VC bounty.
yeah, no, absolutely, yeah. No, and thanks for setting up this call here, Kristen. I think it's a good idea to talk about this in this format. I've been on AAG already like a few times about this. There, you'll always only get 8 minutes. So I think today we have a little bit more time to talk about this. And thank you also, Michael, for joining here to have like sort of different viewpoints here. So, look, I guess like the starting point why I decided to take this forward is really that now with especially with Polkadot Hub rolling out, we're going to see a lot more projects building on Polkadot, new startups that are coming to Polkadot that need to get funded in one way or another. I'm also at the PBA at the moment in Bali, so it's Michael. So over the last 3 weeks or so, I met like lots of founders from all kind of walks of life that are building on Polkadot and that are building cool things. And when people say, "Oh, Polkadot is dead," then I always welcome them to come to the PBA and look at all the developer activity that is going on here at the moment. And you speak to these developers and those founders, and they like Polkadot, they like the tech, they like the ecosystem, but at the end of the day, they still have to figure out like a way to make money. And at the early stage of running any kind of startup, you need to get funded in one way or another, right? And so currently, the status quo that we're currently seeing in Polkadot is that many of them are just coming straight to OpenGov and propose, hey, like fund us. We're gonna build something really cool, and if you give us 50K, 100K, 200K, then we can go ahead and build it out, and it's going to bring new transactions onto Polkadot, and it's going to bring new users onto Polkadot. So come and give us the money, right? That's essentially what you kind of see at the moment, like a lot of projects doing that. Now, from my perspective as an investor, this always felt a little bit odd, right? Because these projects are essentially asking the treasury to put money into these projects, but without receiving any equity in return, right? Of course, there is the promise to build on Polkadot. That's kind of what this is all based around. But there hasn't really been like a mechanism to issue equity in these startups to the treasury itself. And this always felt a little bit odd to me because it's actually the more natural way of investing in general, like no matter if Web3 or any other industry, that if somebody like takes like a share of the risk, yeah, and obviously investing in early stage startups is always a risk, right? That then they also get a share of the upside if it goes well. And I'm not really like blaming anyone here. I think the reason why this hasn't really happened in the past yet is because no such mechanism existed yet, right?
Mm-hmm.
Because as soon as you're doing some, early stage investing, it's usually an off-chain structure, right? So there has to be like a mechanism for, SAFE or SAFTs to be held on somebody's balance sheet, right? And OpenGov itself and the Treasury is not like a legal entity. So
Mm-hmm.
it's a bit hard to say like who is supposed to hold this equity on their balance sheet. And that's kind of what we're trying to change. So, I can go much more into detail, like how we're planning to do that, but that's kind of generally like the problem that we observed.
Okay, I believe you bring up this idea very early. I think the first time I heard you from talking about this is about the beginning of this year. Why do you believe now is the right time to introduce it?
I think one reason is because Hub is about to go live. And, in the past, you had the parachains auctions. So it was, there was like a higher threshold to kind of get started with Polkadot because you had to win a parachain auction first. Now this threshold is being removed. So probably, hopefully, lots of new projects are coming to build on Polkadot.
Mm-hmm.
And they have to have like an easy and simple way to get investment from the ecosystem to build there, but to really be there as an actual investment, not just a treasury grant. I guess there's a second reason, which is equally important, and it's the following one. So, as you know, we're currently in this consultation period for economic reform in Polkadot's issuance, right? Some people call it inflation, but actually the correct word is issuance, right? Like how many new tokens get minted. And I think there's a pretty strong consensus that this number has to come down, right? And we talked about this actually on this Polka World podcast like last week. So as I said, like generally there's a pretty big consensus that this number has to go down. Now, what this also going to mean is that the treasury is going to have less funds available. Yeah, that's a very obvious, a very direct result from this economic reform. And because the treasury will have less funds, less DOT available in the future, I think it also has to become more responsible how it spends them, right? And one of the easier ways how to get responsible about that is stop handing out grants, right? Because in the past we had so much money, so we could just like hand it out without asking anything in return. And so stop handing out these grants and start investing, right? Because the whole purpose of investing is, you put some money in there, you have some equity. If it goes well, right, then this will be an asset in the future if this project takes off, right? And then, like any other VC, at some point, maybe 2, 3, 4, 5 years later, you start selling it down. You start to exit, right? The treasury can exit it. So it has a position of all these like portfolio companies. At some point, of course, it is going to start selling it down. And that money goes straight back into the treasury, right? In the form of, let's say, USDC, right? That's like healthy, that's like sustainable treasury management. Just handing out grants, obviously is gonna be unsustainable if the revenue into the treasury gets cut. So I think that's also like one of the other reasons why it's a very timely discussion to have now.
Okay, thanks for sharing the background of the VC bounty, and the Polkadot hub is coming and the treasury is shrinking. So we should be responsible for the treasury. So let's dive dive right into our conversation. And first, I want to hear some feedback from Michael, because you are a founder. You started a project all by yourself. You know the first hand information what the startup project really need. So how do you view the idea of VC bounty, and do you think it could really help a project grow, or just beyond just providing funding?
Yeah, so I think to understand this and whether or not it's a path we should take, I think it's important to understand where the environment is right now with VC money inside the ecosystem. So I know that there was some discussion on when Max spoke about this on a Twitter space recently about how um, Polkadot should just go do a seed round first.
Mm-hmm.
Outside the ecosystem, it's quite easy to get $1 million or $1.5 million. And then you can start, you can prove a product, and then you can probably come and explain why you should get more funding. Um,
Mm-hmm.
that's not the case. There is no funding for Polkadot-based projects at the moment. I've just gone through this like for the last 2 years, and I've probably done 100 VC calls, if not more. And there's a lot of people who like our project, who like Mandala Chain's idea. But the response that we got more often than not was, we would be interested if you weren't in Polkadot, or we would be interested still if you decide to leave Polkadot. So we can't have our projects that want to be funded experiencing and having to deal with that and having to choose between taking money or staying in the ecosystem, because we're going to lose that 9 out of 10 times. We had a little bit more resolve that we definitely wanted to be in Polkadot. That's why obviously that wasn't a temptation, but like that's not a solution. And so until I don't know who it is, whether it's the Web3 Foundation or just general market sentiment, it can change the opinion of the large VC firms around investing in the Polkadot ecosystem. We need to do this internally, because if there's no funding available, like Max said, then we're just going to lose people. So I know that we have a finite treasury, like the treasury is not infinite, but it's still pretty big. Like it's still over 20 million sitting there. And we're not going to spend that 20 million anytime in the next year or 2 years. We would have to be incredibly fiscally irresponsible. So there's no reason why we couldn't take a percentage of that treasury and set it aside to grow the ecosystem, which would then be a feedback loop of driving more value back to the DOT token, which would then increase the price of the treasury. And then on top of that, then there's still the opportunity to exit some of these investment positions, like Max said, down the road. So I know maybe for some projects that have been around in the ecosystem for a while that did raise funds last cycle, it was quite easy to raise funds in Polkadot. That's why there was many projects that would put Polkadot in front of everything, because it was the hot brand. But that's not the narrative at the moment. So I do think until that sentiment changes, we need an alternative solution for keeping people inside our ecosystem. And so this is really important.
Yeah. And the other thing is, like, all the other ecosystems are doing it as well, right? So if you look at Arbitrum, if you look at Ripple, if you look at Avalanche, even WorldCoin now, apparently, right? Everyone's like going out and spending their own treasury, and sorry, spending is the wrong word, using their own treasury to invest in projects that are building within their ecosystem, doing it off their own balance sheet, right? And rather than handing grants, like doing actual investments that then, sustainably grow their respective treasury. And, that is just a reality that we're living in. And, thank you, Michael, for like sharing this. And, your experience of, some other investors coming to you and saying that, oh, yeah, if you build another ecosystem, then we would invest. That is the reality, right? That is the reality that we're living in this space here, right? So we have to be competitive here. And there's also no reason why we can't be competitive, right? We just have to kind of abandon a little bit this principle that, we're just giving small grants and people are going to stick around just because of that, right? To scale things up, right, you need larger investments. And at these larger levels, again, grants just simply don't make sense anymore. Why would you give this money away if you might as well get equity in exchange? And I had like some, interesting conversation with a founder the other day, and he initially wanted to have a grant, right, from Polkadot for like 200,000, right? Because that's just what people are used to somehow. Like Polkadot Treasury has been handing out so many grants, so people kind of first ask for grants. And then I said, like, okay, so you're asking for like $200,000 in grant money. Would you be willing to give up, say, 5% of your equity in exchange? And he was like, of course, right? Of course, because like these kind of founders, like it doesn't cost them very much at that stage in their journey to give like 5% of their equity away. As a matter of fact, it's even a good thing for them because then they automatically have a valuation, right? They are on somebody's balance sheet. That means when they then go out and want to raise more, then they can always say like, well, we already received an investment from this and that VC fund, this Polkadot internal VC fund. That's our current valuation. It's $5 million valuation. Tell me valuation, right? That's a number that you can work with, right? If you're only receiving grants, then you're never really going to get to that first valuation, and that's kind of like a step that we're trying to support projects with.
Okay. Thank you for sharing. Yeah, it is true. We have to face the reality in Polkadot ecosystem because the narrative nowadays is not attractive from the outside fundings, but we have to grow all by ourselves. So I think VC Bounty can empower more projects and help them to grow or to survive at some stage. Okay.
Just to add as well, Kristen, if I can, sorry, just to add on this, the narrative externally about Polkadot is also wrong. Like the ecosystem has never been more bullish internally. Like that tech has never been more developed. The environment has never been better. We've never had more smoother UX. Applications are growing. On-chain metrics have never been higher. The stuff that's coming down the pipeline is all amazing. We're calling it like Polkadot next gen with some of the projects that are launching, Hyperbridge, Accuras, Mandala. We've got I'm having a mental blank right now. Kylix, Excavate. There's a whole bunch of like amazing projects that are all about to launch inside the ecosystem. And on top of that, we've got Polkadot Hub. We've got Jam coming. Like it's never been a better time. And so this sentiment is actually incorrect, but it's so hard to get attention these days that that if until we can prove it internally, we've got to change that narrative.
Yeah, agree with you. We need to prove it as time goes. So the VC Bounty is really a great idea, but there are some concerns that are raised by the community. The first one is the should a VC Bounty apply to projects that already received the treasury funding, or they are relatively mature, because it is true that there are some projects in this ecosystem. They have been contributing for a while, but they haven't approved themselves in some degree. So for these concerns that raised by the community, what's your viewpoint on this? So who wanna jump in first?
Yeah, I'll take that. So I would say yes, of course. In theory, if you already received a grant, you're still eligible for an investment as well. And I'll tell you why. What's the alternative, right? The alternative is you receive one grant and now you receive a second grant. That's obviously like a worse situation from the perspective of the Treasury to just keep on giving out grants all the time over and over again. I mean, if we had like started with this whole thing much earlier, right, then right now the Treasury would be a shareholder in all the various successful projects that it has supported over the years, right? I mean, I give you some examples, right? Hydration or Nova Wallet, right? These kind of guys, they have received like a lot of treasury funding in the past in the form of grants, right? Because back in the days, that's how it used to be, right? You build something, you ask for a grant, you receive it, voila, no need to give up equity. But if you think about this from a first principles perspective, there is no real reason why these projects should not give up some equity to the treasury in exchange, which would now be sitting on the balance sheet of the treasury. Now, having said that, I of course am not going to go and change the past. Obviously not, right? We are where we are in September 25. So what happened in the past doesn't really matter, right? We're looking forward here. There will be many more projects coming. If some of them already received some grants in the past, sure, that's great, right? I mean, that's how they managed to build until now. But in the future, if it's a commercial project, then I think the Treasury should receive some equity in return. It's really as simple as that. It's a forward-looking bounty, obviously, not a backward-looking one.
Okay. Michael, do you have something to add?
No, I mean, like, I think that makes perfect sense. I know that Mythos played around with this idea of giving some tokens back to the treasury. That's why there's a certain amount of Mythos tokens sitting inside the treasury right now. But it makes perfect sense. It's just it takes management, and so like obviously, engaging with Harbor Industrial Capital quite a bit from Mandala Chain, we understand the process and the due diligence and the management that goes into making these investments, and so it can't be a passive thing that the treasury is just voting on. It takes like a lot more attention. But I think that there's a huge opportunity here. It's not just good for the projects, it's also good for the treasury. Like we could really grow the treasury's value by doing this.
Yeah, it's good from the perspective of treasury, but there's a firmly argument about this. It's about Polkadot treasury was originally designed to support non-profit public goods project. If a VC bounty brings in a profit-driven logic, does that risk moving away from this funding principle?
No, I don't think so. I think it's not like either or. I think we need both, and I think there are still a lot of public goods that are being developed that should continue receiving grants, right? I think when analyzing a project, the first question should always be like, is this a commercially viable product or not, right? And obviously there are lots of great things that are incredibly important, that are pure actual public goods. And public goods I kind of mainly define here in a way of not generating any profit for themselves, right? Not public good in the sense that they're good for everyone, right? I guess that's also one aspect here, but more importantly is like, do they have a path to revenue, right? So I give you some examples that I think are great public goods, like the Papi library, right? Like, I mean, the guys are here in Bali now as well, right? Like super useful stuff for developers, but you couldn't really monetize that, right? So stuff like that I think should continue receiving treasury grants. Another example here, also at the PBA, one guy is working on CK voting, right? Bringing anonymous voting to Polkadot OpenGov. Very, very cool stuff in my opinion. Super useful, right? It's a good thing to have anonymous voting, but this is not like really like a product that you can monetize, right? So these guys should continue receiving treasury grants. Now, at the same time, there undoubtedly are a lot of projects that have like a path to revenue, right? Sure, at the beginning, they're probably not gonna produce millions of dollars in revenue, right? Fair enough, because they're startups. But there's a path to revenue. And in general, what could that be? I mean, RWAs, for example, right? Whenever you tokenize anything, you can always take like a fee, right? No matter if you tokenize real estate or carbon credits, you can always like take a fee, right? So there is a path to profitability, right? Great. Then the whole gaming thing, right? Like you do in-game item trading, you can always take a little fee, right? These are like commercially viable products. Then any kind of exchange, any kind of marketplace, you can always take a fee, right? So there are a lot of these kind of like projects that, yes, at the beginning, they're startups, so they don't have a lot of money. But if they are doing well at the end of the day, they will be profitable, right? And that means the equity of them will be worth something. So why should we support them for free, right? Just so that they go and build on Polkadot. The treasury should hold their equity and then get a return on investment at the end of the day.
Okay. So there should be a clear track that they could get profit in the future. So in that perspective, that Mandala chain is falling in this scope.
Well, yeah, Mandala chain has a token, and so like will have a token once it goes live, and we have sold that token to investors, and now they are owners inside the owners of the network. And so there is a revenue model that's based around a lot of the Mandala applications. There's also staking rewards. There's also transaction fees, and so yeah, where there's a profit that can be derived, that's why we have gone to VCs for that as well. We've also received grant funding from the ecosystem too, and would have been more than happy to part with tokens for that
See, that's an
support.
important point, right? That's an important point what you just said. But back then, this mechanism didn't really exist, so fair play.
Okay, but from a startup point of view, that if you are receiving funding from the treasury, your pressure will be smaller because you don't have to be rushed to returning back something. But if you are receiving,
well, about being rushed, I mean, that's an interesting question, but obviously all these things can be done in term sheet negotiations, right? So when you negotiate a term sheet, usually you put some vesting in there. So, and what we've done often like 2 years vesting or something like that in the past. 2 years is like a decent amount of time, and it's like linear vesting, so it's not all at once. And it doesn't even mean that like as soon as we're vested, we're gonna sell, right? That's not the idea here either. It gives like the project like a certain period of time where they know that nobody can, put their tokens on the market. So I guess it's like a grace period. But at the end of the day, at some point, reality hits, right? And you have to see whether you swim or sink.
Tokens hitting the market as well, Max, is also part of the decentralization process that every project has to have. Because otherwise, when you launch a project, the tokens are fairly condensed into certain buckets. And so by selling tokens to investors, you start to decentralize the project. And if they then at some point sell the tokens as well, then it decentralizes even further. So this is the natural evolutionary process that every decentralized blockchain project has to go through, is that you have to have people buying and selling your token to decentralize the project. So it's a natural course that every project would want to go through at some stage. And if you've got like a vested token schedule, like a release schedule, like I know we've got like a chart and we can track what the release schedule will be. You factor that from the beginning of your project in your tokenomics. And so if someone has the ability to sell it but doesn't, well, that's even better because you've already planned for the sell pressure.
Exactly. Yeah. And there's one other thing that just came to mind, like from the perspective of Polkadot itself, from the ecosystem. Of course, investments are better than grants because that sort of gives you, like you as in Polkadot, a certain sway over their future decisions, right? And I guess the main decision that we're having here is like, whether to stay in Polkadot or whether to move away. Because I'm sure you guys are all way too familiar with like situations where projects received a treasury grant in the past, 100K, whatever, then delivered on some milestones, but then they're not like bound to any kind of, they're no longer bound to the ecosystem. And then maybe Avalanche or Arbitrum come along and say like, hey, we give you another 100K or so if you move over. And then they do that. They're free to do that, right? They're hopping from grant to grant. Whereas, on the other hand, if there is an actual equity holding, right, then we, as in Polkadot, have a much stronger sway over them and say, hey guys, we own you, right? We, as in Polkadot, we own you. You're gonna stay put here, all right? You cannot just like move somewhere away just because someone else is like luring you in, right? Of course, it's not always so easy, because if you only own like 5% of the tokens, maybe it's not enough. But it is still like an actual argument that if you're owned by an ecosystem fund, right, you have a much stronger affiliation to the base layer chain. That is just a fact.
Okay, that's a very good perspective. VC bounties supporting the profit-oriented projects, and I think its role is the nature of the VC bounty is very similar to a VC, actual VC, like HIC. So, in terms of their roles and in terms of the type of project they would invest, how would they different, or they're not so much different, they're just a supplement or something?
So the main difference is obviously who the UBO is, the ultimate beneficial owner, right? For our VC fund, the UBO are private individuals, right? So family offices from Hong Kong, from Singapore, from Japan, from Austria, Germany, Switzerland, right? So these are the people who, at the end of the day, benefit from all the positive developments here. For a VC bounty, the UBO would be the treasury, right? So that's obviously like a very fundamental difference. Now there's another difference, and that is like when it comes down to decision making, because I guess I haven't really like properly explained yet like the mechanism that I envisage for this bounty. The reason why it's called a bounty, right, is because I want to structure it with the bounty palette on Polkadot, on chain, that you have a bunch of curators, and curators are in essence a subset of the DAO who get together and form decisions about which projects to invest in, right? Keep in mind, there has to be a decision-making process here. Like, the bounty is never going to be able to invest in every project that says, fund me. Obviously not, right? And it has to be a bit of a back and forth as well, right? It has to be like a term sheet negotiation. So you need a set of these curators who negotiate with the project. Yeah, and this negotiation can be something like, okay, you guys want to have like a $10 million valuation. We like the project, but we're only going to invest at the $6 million valuation, right? And then they either accept it or they don't accept it. But there has to be a bit of a back and forth. Or they're going to say like, oh yeah, we're planning to build this and this and that. And then the curators are going to say, well, ship the MVP first and show that it works, and then we're going to invest, not before, right? So there's always like a bit of a negotiation that has to take place here. If it's just like a yes and no, and currently OpenGov is essentially like a yes and no, right? That's also not really healthy, right? Also about the size, right? Maybe they say, okay, we want 100,000, but the curators might say, well, we offer you 70,000, right? So there has to be like a bit of a back and forth, and that has to be done like in the interest of Polkadot, on behalf of Polkadot, by a bunch of curators. So now, you asked about the difference between a traditional VC fund and a VC bounty. The interesting thing about this bounty idea is that this decision-making process is actually happening on-chain, right? So you will have like an on-chain record of which curators vote for what, and it is essentially a vote. Let's say in like a 4 out of 5 multisig, or like 4 out of 5 bounty threshold. It is a voting mechanism, and if they kind of find a consensus, right, what would happen is that the money gets released into the VC fund, but with a memo that essentially says this money gets into company X, right? And then, in terms of the ownership structure, the company, the startup, is sitting on the balance sheet of the fund, the Cayman fund, which then in turn is owned by its LPs, and the LPs would be the treasury itself, right? So there's a direct like ownership structure for the investment holding part, but for the investment decision part, it's fully on-chain.
Okay, cool. It's really something new that we have to create. But I want to challenge a little bit. It's not offendance, just want to challenge a little bit and to to see how it works in reality. I want to challenge it. I want to put this challenge to Michael, which is, now you have three options, receiving fund from the treasury or receiving funds from a VC bounty or HIC. What, how would you choose? Because from your perspective, receiving fund from the treasury, it's more economic because you don't have so much burden or returning back. And then if you receive the VC bounty, and the HIC, it's different words, but if you are really facing the options in front of you, what would you choose?
I don't actually think it is a choice because like grant money is a very limited bucket. Like you're not just going to continue to be able to fund the whole project off of just grant money. Grant money is like very capped in how much you can raise. Where VC funding, you can raise an infinite amount of money just depending on how high your market cap of your project goes. So I actually don't think it's an actual decision to be made. Like if there's grants available as a project, I would take as many grants as would be offered to us because that helps us to be able to do whatever it is that we can do. But
nobody says no to free money.
No one's going to say no to money. Yeah. And obviously it's never like without stipulation. Like it comes with like you've got to deliver something. But if you've got a good reputation and you do exactly what you say you're going to do, then and the person giving you the grant feels like it's of benefit to them as well, then there's a good chance that there's grants available for you on an ongoing basis. But that dwarfs the amount of funding that is actually available from an investment perspective. And when you look at the tokenomics of like Mandala, there was significant like double-digit percentage ownership in the network available for investors, and so that's a much more significant number than what you would ever be able to get in grants. So I think both are great, but we're talking about totally different things.
Oh yeah, okay, this is true. So Max, do you have an idea of how large this VC bounty gonna be?
Good question. So actually, I don't know it yet. It should be like, it would be nice to have like a relatively large headline figure because that's obviously in itself going to attract a lot of attention. And keep in mind, even if it's like a larger amount to begin with, it's going to stay in DOT and it's going to stay inside the bounty, right? So that doesn't mean it's going to be spent yet immediately, right? It's similar to whatever, the marketing bounty, the events bounty, right? It gets funded first, then that money is available at the discretion of the curators, who can then go out and spend it. I don't know exactly the right size yet. There are also like different, there are still a lot of open questions. One question, for example, I still have is whether to do a regional bounty, let's say like a US bounty and the EMEA bounty and an APAC bounty and a Latin bounty, or with like different curators from the region, or to just have like one large global bounty. There are like benefits to both models. I haven't really decided yet. I'm speaking with a bunch of people on this. So that's kind of one, open question. The other obvious open question is, of course, who should be the curator, right? And, that's why I'm being very public about this, because, whenever it's a curator who you like, you think it's great. And if it's a curator who you don't like, then you think it's a horrible idea, right? So it's, of course, like a very political decision who to appoint as a curator. But that's why I'm now increasingly public about this, because I want to have like a bunch of like different curators that are as independent of each other as possible, right? That all like know and understand Polkadot, but they're not like kind of part of one camp.
Hello, Max. I cannot hear you right now.
But that it's like a proper, diverse opinion of decision makers that have to come together, and then if we do like a 4 or 5 threshold, find a conclusion there. So in short, it's an open question who the curators will be. I mean, I guess I'm putting this forward, so yes, I'm putting myself forward as one of the curators, but I would only be like 1 out of 5 curators. I wouldn't be able to make any decisions on my own. And we'll see like who else is interested in joining here and to come on as a curator.
Yeah. Okay. Thanks for sharing. I think there are some open questions that are pending, and we need more involvement from the community, so we can leave it open and welcome everyone to join us and leave your comment here. I think to wrap up our conversation, and is there something
actually
you
yeah
want to highlight?
One more thing I do want to highlight, because I think I haven't like properly like fleshed this out yet, which is actually the mechanisms, sort of the mechanics of how this bounty works, right? The on-chain, off-chain. So I talked around it, but I think it's worth like spending another minute or two like actually explaining that, right? So the really like fundamentally interesting question here is, how can a DAO own something in the real world, right? And like academic papers have been written about this question. I think with Polkadot, we have already like made a first step in this direction, and that is with the establishment of the PCF, right? The Polkadot Community Foundation, right? So I wasn't involved in the establishment, right? I just found out about it, but I spoke with them, and they're quite an interesting legal construct, and I essentially want to leverage them, right? So what the PCF is it's a Cayman foundation, and the bylaws of which stipulate that the directors of that Cayman entity execute whatever the DAO decides, right? That's essentially it in a nutshell, right? So when the DAO comes to any kind of conclusion and instructs the PCF to do something, then they're going to go out and do that, right? So we have one example that also comes from Polkaport East, which is whereby we instructed the PCF to sign an agreement with the Hong Kong government about making Polkadot one of the strategic enterprises in Hong Kong. Okay, so the instruction was just to sign this. Yeah. The idea for the VC bounty is that through a vote in OpenGov, I want to instruct the PCF to become an LP, a limited partner, in our VC fund, right? In the existing Harbor Industrial Capital VC fund, right? Which would give the Treasury like a direct ownership link in our fund. This is like a pretty established, like standard, like legal structure, like limited partner in a fund, right? In a limited partnership. So this would be the relationship between the PCF and the fund would be governed by an LPA. And this is like a pretty standard LPA. Like we're not inventing this. This is like a pretty standard legal structure that, all of Wall Street and anyone is using, right? And then you have like this actual ownership structure, right? Now for the decision making of which projects to invest in, that would still rest with the curators. And that's kind of the interesting part, right? So you have this very unique like on-chain, off-chain structure where decisions can be made by the curators, but the ownership structure and all the safes and the SAFs and the equity holding, that is like done on the Cayman fund level, right? And that's a very strong ownership link. It's not just like a, oh, hey, trust me, bro, right? We're gonna like, hold the equity and we're gonna pay it back. No. If, our fund were to rug and we just get all the money and then we just run away with it, right? Then through the PCF, the Treasury would have a very easy way of pursuing legal action against us. And I think this is very important because that's what kind of creates this strong ownership rights for an on-chain organization in an off-chain world, right? And an LPA is a very strong piece of ownership. There is precedents, courts will enforce that. And, the PCF always listening to what the DAO is saying, could do exactly that. Like they could say, okay, these guys are not doing what they're supposed to do. Let's sue them, right? That is very, obviously we hope and we expect that it would never have to come so far, but just like the existence of the possibility of this thread is enough to keep everyone accountable, right? And to make sure that at the end of the day, the money gets returned, right? And all the investment proceeds get returned to the Treasury. So it may sound a bit complicated, but I think it's actually pretty straightforward and probably like the easiest solution for a rather complex problem.
Yeah, I believe that the VC bounty will set up an example of how a DAO that can manage investment. Okay, so Michael, do you have something to highlight so we can wrap up our conversation?
Nope, I think Max did a great job articulating it. This is his forte. So yeah, no, I'm obviously like here being on the other side of the fence and the other side of the VC conversation, and like full transparency, Max is an investor in Mandala Chain, so that's not a hidden fact. Harbour Industrial Capital has been our major supporter. And so, yeah, we're very grateful for them and for what they've done for our project, but it would be fantastic if there was more Polkadot based options as well. And we communicate a lot with a lot of the other projects that are launching at the moment, and the sentiment's pretty well felt through most of our founders in the ecosystem.
Okay, thanks for sharing, and thanks for the sharing from both of our guests. I think we just have a slight conversation to this topic, and I think there are more for us to dive in, but we just keep it posted and keep it open. So if we have a further topics that we need to dive in, and we will invite you guys to come back for a further conversation. And I think so far so good for today. And thanks for all the audience for watching, and thanks for Michael and Max for sharing. And until next time.
Thank you. And the last thing I want to say is, if you're listening to this, I currently have a forum post live on the Polkadot forum in the ecosystem section entitled, "Do we need a VC bounty?" So please check it out and comment there below. It's like literally a public consultation period, right? So I want to use this forum post to get more feedback. So please, anyone listening to this, interested in anything, go to this forum and comment below.
Okay, later I will paste the link in our comment, and so everybody who is watching this video can see this link. You can just click in, and also you can find the link to comment in Polkadot Twitter. We have tweeted a lot recently for this forum. So thank you for everything, and that's all for today. Bye bye.
Amazing. Thanks, Kristen. Thanks, Michael.
Bye bye.
Bye.
Bye-bye.